Ethena is sitting at 44 cents right now. We're below every major moving average, just got rejected by two descending trend lines, and the Heikinashi RSI is printing its fifth consecutive red candle in oversold territory. But here's what most people are missing. While the price action looks rough, Ethena's stablecoin just hit $10 billion in market cap faster than Tether and USDC. Grayscale is considering it for Q4 investment products, and the fundamentals are getting stronger while the token bleeds. I'm already positioned, and in this video I'm breaking down exactly what I'm seeing on the weekly chart, where the real risk sits, and why this might be one of those contrarian setups that separates patient traders from the crowd. Let me walk you through what's happening on this weekly chart. I've anchored a Fibonacci retracement from the December 2024 top at $1.30, down to the June low at 23 cents. This tool projects future price targets that go beyond the first impulse move, and it's mostly used to set take profits after the price starts moving again in the trend direction. The structure shows two descending trend lines. The bigger one has been in place since December, with rejections in January, August, and September. Then there's a more recent trend line that formed in September and just rejected us again in October. Price is consolidating below this shorter-term resistance, which means if we break it, we still have the larger trend line waiting above. That's a two-step breakout scenario. What's concerning from a pure technical standpoint is that we're below all three exponential moving averages on this time frame, the 10, 21, and 55. That's not bullish in the traditional sense. It tells you momentum has shifted, and we're in a period where sellers have been in control. The Heikinashi RSI down below is deep in oversold territory and printing its fifth straight red candle. Historically, when you see this kind of exhaustion, it signals that selling pressure might be nearing a climax. But timing the exact bottom is impossible, which is why I'm focused on zones rather than exact prices. I've marked a green accumulation box between 32 and 48 cents. That's my dollar cost average zone. Price is sitting right in that area, which in my view offers a solid risk-to-reward setup. The volume profile on the left shows a point of control at 37 cents. Think of that as a magnet, a price level with heavy historical trading activity that could pull price back toward it. We need to stay cautious here. My stop loss, the invalidation level, is a weekly close below 30 cents. If that happens, short-term traders should probably step aside. For my long-term position, I would look to reaccumulate around 22 cents if we break down, because I believe in the project and the stablecoin's narrative long-term. Take-profit targets are marked with green circles. First target at 65 cents, where I'll trim 30%. Then 90 cents, $1.30, $2, and ultimately $3. Once I hit the first target, my stop moves to break even. Hit the second, stop moves to the first target. That's how I manage risk once the trade starts working. Now let's talk about what's actually happening with Ethena's stablecoin, USDe. In less than a year, it's become the third largest stablecoin by market cap, currently around $12.5 billion. It holds nearly 5% market share, sitting behind only Tether and USDC. That's not a small achievement. Even more impressive, USD hit $10 billion in market cap in just 500 days, faster than both USDT and USDC reached that milestone. That kind of adoption curve suggests real demand and utility. In Q3 2025, stablecoins saw massive growth overall. USD grew by over $7 billion, ranking third among all stablecoins in total growth during that quarter. Tether led with over $22 billion, USDC added $14 billion, but USD growth rate relative to its size is remarkable. The protocol itself is generating real revenue. In Q3, Ethena ranked fourth among all projects by total revenue, pulling in $160 million. That's actual cash flow coming into the ecosystem, not just speculation. And when you look at the revenue per active address metric, Ethena is efficient. Ethena isn't just growing its stablecoin supply, it's expanding infrastructure. They recently launched Ethena Whitelabel, a stablecoin as a service stack. This lets any developer, chain, app, wallet, or exchange build their own stablecoin using Ethena's infrastructure. The partner keeps a portion of the revenue from the backing assets, which creates an economic incentive for adoption. They've already secured major partners, including Sui Network and Jupiter Exchange. These aren't small players. They're some of the largest chains and apps in crypto, and they're choosing Ethena. The white label service is now available on Conduit, which powers 55% of Ethereum chains with over $4 billion in total value locked. That's serious distribution reach. Ethena is positioning itself as the infrastructure layer for the next wave of stablecoins. If this model scales, it could create a network effect where more stablecoins using Ethena infrastructure drive more demand for the underlying protocol. We need to address the recent Depeg situation because it's been circulating. USD briefly dropped to 65 cents on Binance, but here's the context. It only depegged 2 to 5 basis points on-chain. The real issue was a pricing discrepancy between centralized exchange order books and Oracle feeds, which created a 35% arbitrage gap. $2 billion got redeemed in panic. Binance paid $283 million in compensation, and the system held. This wasn't a fundamental failure of the stablecoin mechanism itself. It was a centralized exchange pricing issue. The on-chain price barely moved. For traders, the lesson is clear. When a stablecoin depegs on a centralized exchange, check the on-chain price first before panicking. Grayscale just released their Q4 2025 assets under consideration report. Ethena is on that list under the financials category, alongside projects like Euler, Hyperliquid, Jupiter, and others. This matters because Grayscale's reports often signal where institutional attention is flowing. Being considered for a future investment product means they're doing due diligence and see potential. Institutional interest doesn't guarantee price appreciation, but it does validate that serious players are paying attention to Ethena's growth and infrastructure. So here's where we are. Ethena's token price is under pressure, sitting at 44 cents in my accumulation zone. The technicals aren't pretty. We're below all moving averages, rejected by descending trend lines, and the RSI is deep in oversold. But the fundamentals tell a different story. USD is growing faster than legacy stablecoins. The protocol is generating real revenue. Institutional players are taking notice, and the infrastructure play with white label could be a game changer. I'm already in this trade with a clear plan. Accumulate in the zone, manage risk with a stop below 30 cents, and scale out at targets. This is not financial advice. I'm just sharing my process and what I'm seeing. If you're down on this token, I get it. These setups test patience. But sometimes the best opportunities come when sentiment is at its worst. If you found this breakdown useful, hit the like button and subscribe. Join my free Telegram group for more updates. Link is in the pinned comment. And if you want to see my previous Ethena calls from June and July, where we nailed that entry at 33 cents, check the links on screen. I'll catch you in the next one.